What's up, guys? This is Ray J back with another video. And in this one, I want to break down what's happening with SPY, Tesla, Nvda, the QQQ, and a couple of other tickers. I'm going to break down why tomorrow is going to be a very important day as we have the FOMC meeting and what the charts are suggesting, at least thus far, as we're seeing some new developments. Just know that I am not a financial planner, so take nothing I'm saying as financial advice whatsoever. And also, if you guys can, please check out my Moomoo link that's down below or use this QR code right over here to sign up. Moomoo's an awesome global brokerage that has exclusive offers. If you guys sign up and deposit $100, you're going to get $20 of free Nvidia stock. Deposits $2,000 to get $50 worth of Nvidia plus a $100 cash reward. Deposits $10,000 to get $300 worth of Nvidia plus $100, or deposit $50,000 or more to get $1,000 of free Nvidia stock plus a $100 cash reward on top of that. You're also going to qualify for an 8.1% APY on uninvested cash, and the offer ends very soon in just about 2 weeks from now, so please use my links down below to sign up to get those free Nvidia shares. Anyways, now let's talk about what's happening with the markets. So as far as the market's going, I just want to mention that SPY has a bearish rising wedge right here that's been developing for the last couple of weeks. And we're starting to show some signs that we might break through this and start to see some downside. Although it's not 100% guaranteed because it depends on FOMC, there are some signs of that on the chart. The QQQ also happens to have a bearish rising wedge, meaning that as we make higher highs and higher lows, we're getting tighter, and the wedge is forming, which could lead to a break to the downside. It's also a possibility, but not a 100% guarantee. So please listen to what I'm saying very closely. I am not saying the stock market is going to crash for sure after FOMC. We could see a correction later on or beforehand. It all depends. But I just want to say that the charts do suggest downside's a strong possibility, but this really depends a lot on what happens with FOMC, and that's something that we can't always make promises about. Now, there's different ways that this could really pan out. When you look at SPY on the 4-hour, we're starting to show some weakness, and the daily time frame is also once again favoring that we might be coming down to fill this gap. So technicals do look a bit more bearish, at least just based off the chart alone, not accounting for what Jerome Powell is going to say. So we'll see if Jerome Powell gives us a pump or dump, but that depends on some factors. Now, when CPI data came out, as you guys know, CPI was not that great. I know everything was aligned with expectations as they were talking about, but notice that all items CPI, this actually went up. The blue line went up quite a bit month over month. And then for core CPI was basically flat. So what does this mean moving forward? For now, CPI is still elevated. And are we going to see it continue to increase, or does it come back down? Will this affect Jerome Powell's speech, or will he just continue to be dovish? It all depends on different factors. I do believe, however, it's very important to not be too complacent, and we have to be very careful with what's basically developing right now, because once again, prices could see continuations higher if we continue to see higher tariffs or other factors that negatively affect prices. And simultaneously, could this just be very, very short-lived, like Jerome Powell said? It all depends, right? Will this be short-lived? Will it be longer term? It all depends, and it may be affecting Jerome Powell's speech. Now, for tomorrow, it's going to be Wednesday, September 17th, 2025. The morning has some housing data. Everything is going to be quite minor in the morning. And we do typically see a lot of sideways chop to start things off. But then what happens is the Fed interest rate decision comes out at 2 p.m. Eastern Standard Time. We're expecting a 25 basis point cut. And then at 2 p.m. Eastern Standard Time, we also have the FOMC economic projections for the first, second, and third year out. That's what we're going to be looking at. This will give us more insights for what the Fed is projecting for many years out, given the current market conditions and given what sentiment is suggesting. So that's some important data at 2 p.m. Expect some volatility. And then at 2:30, we have the big guy, Jerome Powell, speaking at the press conference. This may also cause some volatility because you never know what Jerome Powell is going to say. Right now, there's a 96% chance that the Fed is going to give us a 25 basis point cut. And keep in mind that our Treasury Secretary came out right over here. This is Scott Bessent. He is saying that the Fed is behind the curve and that a 25 basis point interest rate cut is already priced in by markets. And he's saying that the market already is pricing in a 75 basis points worth of cuts between now and the end of the year. So the question is, will the Fed be neutral, or are they going to have a different stance? And I think that's a very, very good point that he has. He is saying that the Fed is, their tonality is what's going to be very, very impactful for this market. And what the big guy says is going to be another big factor. And I agree with that. Whatever Jerome Powell says will be affecting us. So we know the most likely possibility, although it's not 100% guaranteed, I'm just saying most likely, we're going to get a 25 basis point cut most likely. Could we get 50? If we get 50 basis points, I do expect the market to just rally. And then I think we're going to be making new all-time highs and continue to squeeze if they give us 50 basis points. There's only a 4% chance of that happening. And there's a 96% chance they go for the 25 basis point cut. Now, like I said before, this is priced in, so this would likely cause the market to dip. The market's going to likely kind of like see this as like a buy the news, sell the rumor, or sorry, buy the rumor, sell the news, excuse me, guys, that kind of event. So we basically see all of the buying approaching FOMC. We price in at 25 basis point cuts. Then we get some kind of sell off once that's officially announced. That is what's going to likely happen unless Jerome Powell's tonality kind of like affects that. And that's going to be the second factor to remember. So the first factor is that the cut causes a move. 25 basis points is more likely to be bearish. But Jerome Powell's tonality, what the big guy says, is the second factor. Even if we get a 25 basis point cut, but then Jerome Powell is super, super dovish. He's saying inflationary data is going to come down. There's more cuts coming and blah, blah, blah. If he starts saying things like that, that could help the market actually push more. But if he has a different stance, if he actually says something like, inflation, we did see inflation go up just a bit. It's still elevated and the Fed has to be very cautious. They're doing a cut for now and they may continue to cut. But once again, they have to be very, very careful with everything. And if he remains very ambiguous and he does have some kind of like hawkish stance, he could still cause the market to get a very, very big rug pull. So it also depends on what this guy ends up saying. We can't make promises about that. On top of this, I want to add that President Trump has been saying that he could be slapping higher tariffs on semiconductors and pharmaceuticals. President Trump said today that they could be imposing higher tariffs on semiconductors and pharmaceuticals, higher than the 25% duty on automotives. And then he also talked about how, once again, he did have a compromise to lower auto tariffs on South Korea, Japan, and Europe to about 15%. So that's actually a big shift. And then he also said that once again, that they paid nothing. Now they are paying 15%, and some things can, once again, pay more. But then he said like chips could pay more, pharmaceuticals could pay more, and there is a bigger margin, according to President Trump. Then President Trump went on about how he said last month, they could be looking for a 100% tariff on semiconductors, and then there could be a small tariff on pharmaceuticals initially, then they could rise them to 150%, then 250% later. And he's going to be using under Section 232 of the Trade Expansion Act of 1962, the law that he claims gives him the authority to adjust the imports into the U.S. So President Trump is saying that he wants to increase the tariffs again. He's looking to increase tariffs on semiconductors and pharmaceuticals. He's been preaching about this for many, many weeks. The question is, when will he officially do it? He did say yesterday he could be doing it very soon, but I don't know what very soon means. Is it 1 month out? Is it 2 weeks out? Keep in mind, if he does impose a high tariff on semiconductors, like let's say 25, 30, 40%, even 100%, it's going to cause a big move in the markets, especially for stocks like Nvda and AMD. So be ready just in case. President Trump also said that too late, Powell must cut interest rates now, and bigger than he had in mind, housing will soar. So that's what President Trump is basically saying. So what does this mean for the markets? Okay. If we're bullish, well, here's what's going to likely happen tomorrow for us. We're going to see some chop tomorrow in the morning. I think we kind of chop around. Then we have Jerome Powell's speech. Jerome Powell is either going to cause us to break and hold above 662. If we break that, we could be looking for another attempt to push temporarily. But even if we do push temporarily, I still think we could be coming back down later on in October like this. Even if we get another rally back up to like the 660s, we could still turn later on as time goes on because of seasonality and because of this rising wedge. I still have that view, but it all depends, and we're just going to take it one step at a time. That's like the more bullish case. The bearish case is going to be that we get a 25 basis point cuts, then Jerome Powell's tonality is not really dovish. He starts turning more hawkish, and the market begins to kind of like subside, and we start to see a big dip on SPY back into like the 650s. That's going to be the more bearish case, depending on what Jerome Powell ends up saying. Now, the charts, the rising wedge on SPY suggests that the bearish case is a bit more likely to happen, But I can't make promises as it depends on Jerome Powell's tonality, so be prepared for anything. But keep in mind that there is a greater probability of downside based off the rising wedge and based off the triple bearish divergence on SPY. Like I said before, I'm not going to just go all in on shorts and bet the market's going to crash. Right. You have to be very, very patient and see what Jerome Powell's about to say. You never know. And when we're going to be patient, you want to be very unbiased. Although the chart does suggest downside is more probable, we'll see just to be safe. So I'm being very unbiased here, guys. So please don't misinterpret my words and be very, very cautious. For the QQQ, the same thing is essentially going on, right? When you zoom out of the triple Q, you also have a rising wedge. When you zoom out, there's a rising wedge here. There's also a triple bearish divergence on the MACD. We still have a divergence, and that does suggest downside is looking a bit more favorable. Now, in case Jerome Powell gives us a pump and we see a big pump tomorrow, if we hold above 595, I think we're going to be pushing closer to like 600 on the QQQ. If Jerome Powell causes a rug pull and we can't hold above 590, expect us to dump to at least the lower 580s pretty easily. With the rising wedge and the fact that some stocks like Nvda have some downside potential, the odds do favor us maybe seeing consolidation in the morning, maybe popping a little bit, then eventually starting to dip back down. That is the most likely possibility. But I don't know for sure, guys. It depends on Jerome Powell. With him, you never know what he's going to say. You don't know how he's going to manipulate things or what else he tries to just tell us, which is why the best move to do is just to be very patient and to manage risks. Once again, guys, we'll have to wait and see. Now, the IWM Russell 2000 also had this inverse head and shoulders. We came very close to hitting that 245 target. If 240 breaks tomorrow, we could be looking for 242 to 245. But if we're bearish, the bearish case is going to be that on the daily time frame, we actually have a negative PPO crossover. There's a gap to fill down here at 226. So the daily does look a little bit weaker. If we're bullish, you want to see us hold above 240 and break to new highs. If you're bearish, you want to see us lose 235. If that fails us, expect us to dump to fill the gap. It could go either way, but we'll see what Jerome Powell causes. So be ready, guys. Be prepared and do what you have to do. We'll see what the big guy ends up doing. When it comes to ES, we're rejecting here. We have support at 66.50. If we're bullish, you want to break 6,700 and continue to squeeze. If we can't hold above 6,700, if Jerome Powell just causes like a pump and dump and we lose 66.50, I do expect us to dip to 66.20 to 6,600. Then we'll see if we bounce not before we continue to fall back down. On NQ, you want to see us basically break past 24,600. If we make a lower high, we could be dipping back down to 24,400 to start dipping back down. And the odds do favor us dipping to 24,400. On Bitcoin, we're looking a bit more bullish. We have 117,000 resistance alongside 118,000. But if we lose 115,690, we could be dipping back down. So we might be retesting basically 117,000. Then we'll see if we turn back down as time goes on. For Tesla, we're looking a little bit more decent on Tesla. This looks like it's going to retest 425 tomorrow, but be careful because the Fed could greatly affect this. If Tesla breaks 425, we could easily push for 435 next. But if we reject and retest 402 and fail there, then we're looking for a dip back down to the 390 area. So break 402, we're bearish, but break past 425 and we're bullish. I do see a test of 425 in consolidation. Then we'll see if Tesla gets a rejection because of the Fed. Keep in mind on the daily time frame, Tesla's holding up nicely, but there is still this big gap to fill over here. There's actually a lot of gaps left on Tesla. There's a bunch of them all the way back down to 330s, 360s. So we'll see. Is Tesla about to just rally from here? Does Tesla just kind of pop and then drop back down for a correction? Could go either way. Nvidia looks weaker to me. There's a big gap to fill all the way down to 170. It might pop a little bit tomorrow and consolidate, but the chart does favor 170 is the most likely possibility. Yes, it depends on FOMC, but we'll see. And then if President Trump imposes those semiconductor tariffs, I would warn everyone to be very, very careful as time goes on. On Apple, we're looking decent. We're in the middle with Apple. We're not too bullish or bearish. To be bullish, you want to hold above 240, but to be bearish, you want to see us lose like 236. If that fails us, we're looking for 232. Now, one concerning thing about Apple is the topping pattern and the fact that there's a gap over here to fill at 233, which could be indicative of downside, especially as we have like a double top here. So we're going to see if Apple gets a rejection or not. It could go either way, depending on FOMC, but be careful as there is a gap to fill below, so it could be favoring downside. Netflix is making lower highs here. We need to get back above 1214 to really break out. If we can't hold above that, we're going to be favoring 1180 as our potential targets. Once again, the downside risk is still there. MSTR, however, is looking a bit more decent. When you look at the 4-hour time frame, we're going to be favoring basically 338 to 340 as our target. I think we could be looking for a little bit more upside, at least for now. Celsius is looking a little bit more bearish if we can't hold above 56. We're still favoring a move back down to 54.5 or below, and then eventually 53.39. So this still favors downside, at least technically speaking. Just like Nvda, Supermicro is looking a little bit weaker. If President Trump imposes those semiconductor tariffs, we could be looking for 44 to 43.75 as our targets, so we'll see how it goes. Palantir is going to be favoring 167, and we'll see if we bounce or not, but there could be some temporary downside. Rivian still looks bullish like we talked about yesterday. We're going to be favoring 14.6. SoFi is in the middle. We need to get back above 28 to be bullish. We might push a little bit, but if we can't hold above 28, the odds are going to be favoring 26.75. AMD is looking kind of weak here. Now we have resistance at 162 and support down here at 159. We could retest 159 to back down as we're making lower highs, so be very, very careful. And we'll see what happens from there. ARM is also going to be favoring 155 as resistance. So if we end up losing 152, we're looking for a dip back down. Look for 155, then a dip back down as time goes on. Palantir has 67 as our resistance and basically support down here at this 66 area. If we don't hold above 67, we could be turning back down to the lower 66s. Coinbase has resistance right here at 330 and support down here around this 322 area. We're just kind of going back and forth like this, but I do think the odds favor 322, and we'll see if we bounce. For Amazon, we could be dipping back down to 232, and we'll see if we bounce, but there is some downside risk right here because we're making a lower high compared to that high over there. We might retest 232, and we'll see if we get a big bounce on Amazon or not. It still could go either way. It's still very neutral. Meta has resistance at 780. We need to hold above 780 to continue. We're actually looking more bullish on Meta. We're going to see if it retests 775, then continues to break out for like the 780s. The chart does favor the 780 area. It's very possible to be tested depending on FOMC. Google's starting to churn right here. We're going to be likely testing 250. We have to bounce off 250, continue to push. If 250 fails us, we turn back down. We're kind of in the middle right now. And then Microsoft has support at 508. If that fails us, we're going to be dipping to 505. So be very, very careful. For the VIX, we're looking bullish. We're trying to hold above 16.25 if that holds. We're looking for the 17s. Also, keep in mind that we have a bullish falling wedge on the VIX. That could lead to more upside, and that could be a sign the market is about to see a big rug pull. The dollar is dipping right now, and then crude is also kind of like flat. It's starting to push a bit. Not really affecting the market too much. I also think that the 10-year is going to be dipping. With yields continuing to fall, that's once again, decent for markets. So we have very mixed signals, right? The VIX is looking bullish. The market has like a rising wedge. Are we about to see a big rug pull or not? Expect a little pop tomorrow morning, some consolidation, and then we're going to wait for FOMC. That's the next factor. There's not going to be much until then. At 2 p.m. Eastern Standard Time tomorrow, that's when we're going to see a lot of volatility. We'll see what happens if the Fed gives us a 25 basis point cut. That is the most likely possibility. And then Jerome Powell's speech is either going to launch this market up or cause a massive rug pull. We will have to see. Anything could happen with Jerome Powell's speech, so you never know. And the best thing I could really tell you is just to be very unbiased, be very patient, and we'll see what he ends up saying tomorrow. So be ready, guys, and expect some high volatility. With that being said, I thank you all so much for listening. I hope you guys have a very awesome rest of your guys' days. Unfortunately, I just want to make it very clear we don't always know what's going to happen, and it's very intelligent to be very cautious of the unknowns, right? I don't know what's going to happen tomorrow. I don't know what Jerome Powell is going to say exactly. So I know that I don't know, which is why I'm going to be very careful. And that's the best thing I can really tell you. Be careful. We have rising wedge setups and SPY in the QQQ, which do technically favor downside, but that's not 100% guaranteed because with FOMC, you never know. So we're going to be very unbiased for now and play the charts in front of us, and we will see what the big guy has to say. Tomorrow is going to be one of the biggest days of the year because it's going to be one of the first times the Fed is cutting in a very long time, and we'll see what this leads to moving forward. I thank you all so much for listening. I hope you guys have a very awesome rest of your guys' days, and I'll be back very soon tomorrow before market open to give you guys an update. Thank you all so much for listening, and peace out.